Your best bottling plant employs 3,300 people. How do you get 3,300 people working at peak efficiency? Your best store has reduced waste, water, and energy usage. How do you make every store like your best store? Your best property has every guest raving. How do you make every property like your best property? The answer is Ecolab. Better performance, better outcomes, better impact. Ecolab. Now every location is your best location.
When you're with Amex Business Platinum, going the extra mile for your business pays off. With 5 times membership rewards points on flights and prepaid hotels booked through AmexTravel.com, you can earn more points to help grow your business. And with access to more than 1,400 lounges globally through the American Express Global Lounge Collection, including the Centurion Lounge,
can I get you a refill?
You can stay fresh wherever your business travel takes you. That's the powerful backing of American Express. Terms apply. Learn more at americanexpress.com/Amex Business.
Bloomberg Audio Studios. Podcasts, radio, news.
This is a breaking news update from Bloomberg. Instant reaction and analysis from our 3,000 journalists and analysts around the world.
Looking at shares of Amazon in the after hours, one number that really sticks out to everybody. Second quarter operating income outlook misses. $13 billion to $17.5 billion. The estimate was for $17.82 billion. Let's get into it with Caroline Hyde. She's the co-host of Bloomberg Technology on Bloomberg TV each day at 11 Wall Street time. She joins us here in the Bloomberg Interactive Brokers studio. Caroline, typically we'd be talking about AWS in any other quarter.
That's crazy.
That's not at all. I mean, for years, that's what we do. AWS, that's what we care about. That's where the margins are. But then you have Liberation Day, so-called Liberation Day. And now all anybody cares about is who's paying for these tariffs?
But I suppose there's also still the focus on margins. The reason we care so much about AWS is it's the profit driver.
Right.
But we're now worrying about a profit issue here with an operating income number coming in well below expectations. That breadth of guidance that they give us, that almost like 4 billion wiggle room, that's very normal.
Is that operating income guidance is that due to tariffs, or is it due to competition when it comes to AWS?
I think you have to work out also whether it's infrastructure spend. Look, what happened with Meta was that they said, look, we're going to have to be spending more on our capital expenditure because the infrastructure costs are going to be a little bit higher, but profitability overall is going to be sucked up by what ultimately they're going to have to pay for. From a margin perspective, is it that they suck up some of the margin hit themselves to keep the consumer, which is in a vulnerable position, keep coming back to Amazon? Is it also that the third-party sellers are going to be retrenching a little bit more? What was going to be happening to advertising? Because they did really well on advertising. But if you're seeing from some of these Snap and the likes of others talking about the Chinese retailers no longer wanting to be overall spending on advertising, is that going to be taking a knot in terms of the overall margin generation? And ultimately, what does this mean in terms of how much AWS and its strength being able to prop up ultimately an e-commerce side of the business that has to suck up a margin hit if they're going to be able to keep the consumer coming?
We were kind of blown away. And I mean, I went through the press release really quickly. I didn't see tariffs. Alex mentioned one, but it was kind of in the the bottom disclosure. Like they didn't seem to touch it, and you can assume.
Would you touch it? after what happened this week?
Did not touch it.
After what happened this week?
He didn't even use the word tariff. As the CFO of Meta, they at least put tariff and trade policies, which are the only new lines in that forward-looking guidance paragraph.
All right. So, but that's going to be top of
Don't
mind.
say the word.
I know. It's like kind of amazing, but I get it. I mean, I don't know. What kind of color can we expect from them? I think there's so much speculation. I mean, will they be able to really pinpoint the cost? What are they seeing at this point, Caroline?
Because I think Andy Jassy did give an interview earlier in last month now in April. Isn't it mad that it's May? But
it's crazy.
Looking back, and really he was saying, look, there's going to be horses for courses. There are some negotiations that we're in the midst of. Yeah. And yes, maybe we start to try and push back and ask for ultimately the ultimate seller, the Chinese seller. Remember, Amazon gets about 70% of its products from China, whether they're selling them on their own platform, whether they're selling them via third parties. And so are they going to pass that off on them if they're in the midst of a negotiation? Maybe they do. But otherwise, if they've got the contract already existing, they're going to have to suck it up a little bit themselves. And we certainly know that they're not going to be making it evident how much the tariff is going to be adding to their prices.
Well, how do you roll that into, right? That's the report that they... were they really considering...
I'm sure... a lot of these things, it's the same with the Tesla story, and then potentially maybe they have to consider a new CEO at some point. There's probably no smoke without fire. I'm pretty sure at some point the whole side of the business, now the whole
that's the
side,
Shein
super
sort
low
of
cost. Well,
version
Shein
of
and Temu are making
Amazon.
it evident how much tariffs are increasing.
They are.
So probably you went internally, oh boy, that's what they're doing. Maybe we should consider something similar. But at no point was this signed off. At no point was this run up the ladder and them going, oh yeah, off you go, start making it evident. So I'm pretty sure that they are clear that this was not signed off, this was not agreed
But
to.
they have to be discussing.
But they have to consider it.
Yeah.
It'd be foolish not to.
Amazon at least find itself in the position that this is not a story that's unique to Amazon from the perspective of a retailer. A company such as Walmart and Target would have to go through the same thing.
Oh, so true.
What is different, though, is Amazon's exposure for its cloud business. So we can't look at Microsoft as sort of a pure play comparison to Amazon anymore, or even Google Cloud. What does it mean that Amazon, it kind of doesn't matter if they have to raise prices to the extent of competition coming in and saying, we can get this product for cheaper for elsewhere. Because if Amazon's prices go up from their suppliers, I'm talking physical goods here that are sold through the retail site, everybody's prices are going to go up too. And that just means, as American consumers who buy this stuff, we're the ones who are going to have to be paying.
And that is trying to be what's told to the consumer base right now. Evidently, this is going to be an inflationary pressure. Bank of America Securities, ahead of these numbers, put it really well, that basically, it's going to be the biggest focus is tariffs. And given that everyone's in the same boat, ultimately, you're going to have to bet a little bit that Amazon's going to weather this better than anyone else. They've got the cash on the balance sheet. They've got potential ability to stomach some of the margin hit much more so than a Wayfair or some others that are offering e-commerce out there. And so, Amazon is the one perhaps in this difficult situation that you build on to ride out the storm.
But there's always the flip side too, because, the 70% of their goods, right, that come from China, whether it's directly or through, they employ Chinese workers, right? So I'm just curious, what's the Chinese perspective on Amazon and the importance it is to their economy? Do we ever think of, I don't know. I don't know. And that's
the key question for Xi Jinping, is that ultimately how much do they have to support their own economy, support some of their exporters at this moment? And I'm pretty sure that China has decided that they're going to fight fire with fire in many ways and decide that, look, if you want to cut us off, so be it. But I think Amazon is the one in the position here that has to help with the renegotiations, has to stomach some of the margin hit, because we don't know where this is going for the next few months. At the moment, they're facing 125% tariff.
Right.
Where does it go from here? How much are they able to change supply chains? So in the interim, they probably suck up the margin hit. In the longer term, how do they start to change? As we've seen with Apple, suddenly a lot of my goods are coming from India now, which other countries start to benefit. But you're right. What is their relationship like with their suppliers? How are they trying to make things? That's interesting with Amazon always, they're not afraid to disappoint investors on profit.
Good point.
Yeah.
Their sales are actually looking pretty good.
They spent a decade doing it.
Yeah.
A decade doing it.
Their forecast is good and resilient for sales. It's just they're saying, sorry guys, suck up the operating margin hit.
The stock is now, still down 2%, but it's not down 4 or 5%, which it was before.
Call hasn't started.
No, true.
And they're talking all about the innovations. They're talking about the satellite side of the business. They're talking about putting Saks as an offering on the e-commerce site. They're talking about what you can get in terms of AI innovations if you're coming to their cloud computing. Also, their foundational models that they're going to aim at consumers too. They've got their own chips. They're going to try and talk up the resiliency of their business model, when in the interim, yes, they might going to have to pass on some cost to the consumer base, and the e-commerce bit just lags somewhat.
It's just as you said, amazing. We would normally be just all over AWS.
That's what
it's just kind of fascinating, right?
Caroline, you got to go. TV is calling. They want to talk to you. Caroline is the co-host of Bloomberg Technology on Bloomberg TV, 11 o'clock Wall Street time. Let's go continue on Amazon, specifically on the retail side. I want to bring in Poonam Goyal, senior analyst for e-commerce, athleisure, off-price retail for Bloomberg Intelligence. She joins us from New York City this afternoon. Let's talk about this miss when it comes to second quarter operating income, the outlook there. Is that a result of tariffs in your view?
It has to be, because when I think about the operating margin that they just posted with AWS, incredible, near 40%, the downside that we're seeing going into 2Q, I can't think of anything else that could be driving that than higher costs that they'll have to absorb due to the tariffs.
Are you surprised that, like, we kind of, went through that press release? There's really nothing on tariffs. There's like that disclosure that kind of dumps everything at the very bottom of the page. Not surprising to see that they didn't really address it in the release. And I guess it's all going to come out on the call.
Yeah, I think there's going to be a lot of questions about tariffs. Keep in mind that, Amazon is directly exposed on the 1P side. So roughly 40% of its business is where they do have to deal with tariffs. The other 60%, that's 3P, the sellers have to deal with them. But Amazon helps you set the price on its platform to make it competitive. So there's just a lot of back and forth that's going on. And with some suppliers, they are working one-on-one to see where they can help offset the price increases. But the biggest delta between 1Q and 2Q is tariffs. So the guidance that we see here has to be a result of that wide net that they've casted.
You mentioned the P's.
What do you
translate for us?
Sure. Third party and first party. So first party is when Amazon owns the goods. So basically they take on the cost. And they directly source it from the supplier. Third party is if you and I go onto Amazon and we start selling stuff.
What's the breakdown in terms of actual goods that are sold third party versus first party?
Sure. Third party we estimate is about 65%, and first party is about 35 to 40%. So
okay.
60-40.
And is there more, like third party is more from China, or do we not know, than first party?
Well, Amazon doesn't tell you how much they get from China, but just by looking at what's on their platforms and third-party data, irrespective third-party or first-party, it's estimated that over 70% of what's sold on the Amazon.com platform is from China. So it's a large, large, large piece of their marketplace.
And just to remind everybody, I mean, you study e-commerce, athleisure, off-price retail. This is your world. This stuff is made overseas. Like very little of it is made here in the U.S.
Very little. I mean, food is the only thing we may procure locally that Amazon sells, really. Everything else, the bulk of what you buy in retail in the U.S. is made outside of the U.S. It doesn't matter who you are.
What?
I don't know.
Okay. I'll let him have a moment. You know what's interesting, Poonam? We kind of just laugh that normally when we're talking Amazon, we're all over Amazon Web Services. And it's like, oh, yeah, that retail business. So what an interesting kind of report to go through and what we're focusing on. I do want to point out, though, that AWS reported first quarter sales gained 17% to $29.3 billion, in line with analyst estimates. It was the unit's slowest growth in a year. So it does feel like, I don't know, like, what do we get out of that?
I think it's okay. I mean, We're going to see businesses pull forward spend, pull back on spend. There's still a lot of momentum here on the AWS side. And really, while the sales were just in line, the margin was incredible. 39% operating margins, 39.5% roughly. That's huge. Consensus is looking for about 35%. So we do think, this business will ebb and flow. And you'll have high margins, you'll have low margins depending on where they invest. But the long-term potential of AWS is still pretty sizable, and there's a long runway here.
Okay, so if we think about this in the context of what we've heard from other companies thus far, what we heard from Microsoft yesterday, and as a reminder, I mean, you cover the e-commerce, the athleisure, the off-price retail. How do you think about this in terms of the retail world, like the Walmarts of the world, the Targets of the world? How does this report sort of inform the way we should be thinking about, and investors should be thinking about those other companies?
I think if Amazon's facing these tariff headwinds, so is everyone else, including Walmart, including smaller companies, medium-sized companies. And really, there is no escape from this. Unless we see things calm from here, the 145% tariff that you see on China is sizable.
Yeah.
And if that stays that way, the consumer is going to be paying higher prices. We will see some out of stocks on shelves in the coming months, as most companies have halted shipments from China. And it's not going to be an overnight switch to take everything that you make in China to somewhere else.
Or even impossible for some things, some analysts have said. Well, you said empty shelves. Right. Where are we going to see them? What do you think we'll see empty?
I saw empty shelves, but in like a drugstore, but I don't know.
That's because everybody stole everything there, Carol.
I know.
Come on, don't you know how this works?
I know it's always a little war perspective. Yeah. Go ahead, Poonam. Sorry.
Well, you won't see empty shelves on Amazon, but you will see out of stocks. In fact, I was just browsing the web randomly, and I started to see some things that just said out of stock, like we'll let you know when it comes back. So I think you'll start to see inventory, especially that comes out of China, be put on hold. And we don't know when it'll come back because unless you raise the prices or double them, you're not making the same margin on them.
What's the consumer's willingness to pay for this stuff? Because as I was mentioning to Caroline, if we see these price increases across the board, if we see them at Target, if we see them at Walmart, it's not like this is an Amazon-specific story. We're going to see this everywhere. At what point does the consumer throw in the towel and say, I'm not going to do this, I'm not going to pay?
I think the consumer will say, I'm not going to pay when prices go up 30, 40%, right? It's going to get more expensive. And if they say they don't pay, it means before they bought 10 things, now they'll buy 3 things. Where are they buying those 3 things? Are they going to trade down from a national brand to a private brand? Are they going to buy more staples that they can, like staple colors that they can reuse, recycle, rewear, and wear less fashion that goes out of style quickly? There's going to be trade-offs if prices rise materially. That said, we do think that, people will just switch brands, they'll switch options where they can get things cheaper. We're going into the back half in just a few months, and that's the peak selling season of retail. When you think about toys, specifically, right, for the holidays, when you think of back to school.
Yeah.
I mean, what do you get your kids if you're not going to get them the Barbie and you're not going to pay,
Can only get them 2 Barbies.
Not 30 Barbies, Carol.
Only 2 dolls.
Yeah,
apparently.
2 dolls.
Right.
Sorry. No, I'm just repeating, what we've heard. Hey, one last question. I will say, though, with the Amazon cart, like when you put them in and like you automatically see the value, like if things start to get more expensive, like you might pull back. 30 seconds, top question you think must be asked on the Amazon call.
How are we weathering this tariff storm that we're going into, especially, with 3P sellers? How are they going to control that Amazon is still an attractive place where value is seen because they don't have a control on prices for everything?
All right, going to leave it there. Hey, Poonam, thank you so much. Super good conversation. Poonam Goyal, Senior Analyst for E-commerce, Athleisure, Off-Price Retail for Bloomberg Intelligence. Shares of Amazon, by the way, which gave a weaker than expected forecast for operating profit in the current quarter, off its lows, but still down.
Switch to Verizon Business and get more from your internet without paying more for your internet. Get LTE Business Internet starting at $39 a month when paired with select business mobile plans. That's unlimited data, and with it, unlimited possibilities. Start saving today with Verizon Business, ranked #1 in small business internet customer satisfaction by J.D. Power. Starting price for 25 megabits per second LTE internet plan with smartphone plan savings, plus taxes, fees, and economic adjustment charge. Terms apply. For J.D. Power 2024 award information, visit jdpower.com/awards.
There are presentations. And then there are Canva presentations. With Canva, you can use AI to take your presentation to the next level. You can generate dynamic slides and text with a simple prompt. You can drag and drop graphics and charts from Canva's media library and add interactive elements to plus up your deck. And with collaboration tools built in, the whole team can work together better. You'll love the presentations you can easily design with Canva. Your clients and coworkers will too. Love your work with Canva presentations at canva.com.